It's Tuesday, October 31st. This is the Market Comment by Ref BoJ. I'm Christina Marucos, and thank you for joining us at XM.com. The Bank of Japan took another step towards policy normalization on Tuesday, tweaking its yield curve control policy for the second time this year amid signs of broadening inflationary pressures. As expected, the bank upped its inflation forecasts for the next 3 fiscal years, with those for 2023 and 2024 seen above 2%. This prompted policymakers to make a further adjustment to their yield curve control policy, raising the reference point for targeting the 10-year JGB yield from 0.5 to 1%. There was a sense of disappointment that today's decision was just another minor tweak. The yen plummeted against the US dollar, which jumped back above the 150 level. There is a danger, though, that markets are missing the bigger picture with today's announcement by not appreciating the significance of the upper hard cap being abandoned. Yet, a bolder policy shift is unlikely to come before the 2024 spring wage negotiations. So until then, traders may not be too convinced by the Bank of Japan's incremental policy adjustments. The dollar was either flat or down against its other rivals on Tuesday as Treasury yields headed lower. There was relief yesterday when the U.S. Treasury said it will borrow less in the fourth quarter than it did in the previous quarters. However, borrowing is expected to rise again in the first quarter of 2024, so the relief on yields might only be temporary. The 10-year Treasury yield eased to one-week lows today, while Japan's jumped to a new 10-year high, making today's moves in dollar-yen all the more surprising. The euro was one of the strongest performers today, hitting a high of $1.067 before easing slightly after Eurozone GDP data missed expectations. The flash CPI print also came in below forecasts. Softer CPI data might actually be aiding the euro, as it would allow the European Central Bank to cut rates sooner rather than later, thereby reducing the odds of a severe downturn. Gold prices were attempting to reclaim the $2,000 an ounce level on Tuesday after failing to close above it yesterday. As the war in Gaza rages on, there are few indications that a major escalation is imminent, even as the situation remains highly volatile. The precious metal appears to be consolidating this week, while the improved risk sentiment is lifting oil prices slightly after sliding sharply yesterday. This was today's market comment. Thank you for watching at XM.com.